It's a new month here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, Shanghai lockdowns. China has been intensifying lockdowns in Shanghai due to a surge in COVID infections over the past few weeks. This has included many transport restrictions as well as resulted in the temporary closing of many factories and businesses. Freight traffic in Shanghai has fallen over 80%, and the city handles roughly a fifth of China's port volumes. We have begun to see case rates fall, but restrictions remain and continue to cause bottlenecks in an already strained global supply chain. Continued issues could contribute to an already high inflation rate at 8.3%, so we will look for some reprieve into the summer for global shipping and the sourcing of goods. Number 2, housing market. With the Federal Reserve on deck to hike by another 50 basis points in the coming 2 meetings, and with inflation elevated to levels not seen since the early 80s, the bond market has been reeling and mortgage rates have not been immune. The national average 30-year fixed rate has moved from 3.5% to 5.5% since the beginning of the year. Home prices as of February were also pacing at gains of almost 20% year over year. This has led to housing affordability that is the worst dating back to the late 80s, as price gains and mortgage rate increases have led to high payments relative to income. Home builder sentiment and housing starts remain strong, but overall housing activity has slowed. Supply has been tight, but has loosened a bit recently. We will be watching for signs of further slowing in housing due to affordability, as a weakening in this market could have knock-on effects for consumer confidence and the economy as a whole. Number 3, jobs. With GDP down 1.4% in the first quarter, the risk of a true recession appears to be rising. Perhaps the best bellwether for monitoring this risk is the job market. There are still nearly 12 million job openings and roughly 6 million unemployed. The unemployment rate is at a cycle low 3.6%, and we have yet to see a meaningful uptick in claims for unemployment. The job market is currently very strong. However, within the ISM surveys for both manufacturing and services, we have seen businesses report weakening sentiment around future hiring. The employment portion of the ISM services PMI dipped into contractionary territory in the past few months. We will be closely watching if businesses do in fact slow down the pace of hiring, and more importantly, if a weakening in the job market occurs, resulting in higher unemployment. And that's been your Market Minute for the month of May. Thanks for listening.